All right, what is going on, everybody? Hope you guys are having the best of your entire life. In this video, I'm gonna break down how I made $6,700 trading or day trading, maybe in about an hour on Tuesday, July 2nd. All right, so I'll break down the reason why I took the trade, the price action that was leading up to the trade, the entry points, the price action that led me to jump out of a trade, my strategies, how much money I was risking in the trade, and like all the fancy stuff. All right, it's gonna be good. There's gonna be not a long, very long video because I'm only gonna break down 2 trades, but I'll go in detail why I took these trades and all sort of stuff. Right, so it's gonna be value. It's all about value, yo. And if you do not know me, my name is Somesh. I'm a full-time day trader. I've been day trading since I started learning in 2018, so I've been day trading quite a long time, right? And the reason why I make these videos is it only takes me about half an hour, but I know for a fact if even one of the videos made even one person profitable, it's just a connection that I have all over the world. Like imagine 30 people came out 5 years later, bro, your videos made me profitable, right? And then we have a connection all over the world. Like someone's in New York, someone is in Mexico, someone is in Texas, someone's like all different part of the world. And it's good stuff, right? That actually, to be honest, I'm 25. By the time I'm 45, my goal is to have connections all over the world. It's about power, baby. Anyway, we don't want to get into it. You know, some people are going to be like, oh my God, how can you say that? Fuck it. Let's get to it. Let's get to the trades and let me break it down. The first trade that I took was on Tesla. And the first thing that I'm going to break down is whenever I'm trading, there's different time frames that I use for different times of the day. So the first point that you need to take down or write down is time frames. A lot of people just watch one time frame whole day. And that is the worst thing that you can do because it confuses you. You do not have a strategy behind it. You just do what someone told you to do. And I have backtested about, oh my God, thousands and thousands of trades. And I know what time frame worked the best in what time period for me. And I can only break down what works for me. And whatever you want to do with that information is on you, right? So time frames. I watch 2-minute chart for first half an hour of the market open. So that means 9:30 Eastern time to 10 o'clock Eastern time, I watch 2-minute chart, okay? Then I watch 5-minute chart for 10 Eastern time or New York time to 11 Eastern time, all right, 1 hour. And then I watch 10-minute chart for after 11 to 3 p.m. Eastern time. Now, I do not like to trade last hour of the market open. A lot of people go, oh, but that's power hour. It doesn't work. All right, it's a smart money hour. You will try to trade. The price action's wild, and if you cannot make money in first 5.5 hours of the market open, there's no way in the world you're gonna make money in the last 1 hour of the market open. And personally, with me, my win rate significantly drops. So I do not try to fix this. I just try to keep, shining my strengths rather than trying to, fix the weaknesses. All right, sweet. Now we got that out of the way. Let's go over the SPY trade. And I took this trade before 10 o'clock. So I'm on a 2-minute chart. Let's go over it. So the market significantly gapped down like overnight. So after I was shut at about 544.89. And then this opens at 544. Went down all the way to 542.5. And then towards the market open, we were in a slight uptrend already. So how does an uptrend, how can you define an uptrend? This is an uptrend, right? So price goes like this. Price is making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. That's called an uptrend, right? So I was like, okay, the price action that is leading up to the trade, a lot of people do not like to watch pre-market action. I love to watch pre-market action because it kind of tells me what can happen right at the market open. I get ready from that action, right? So I know that we're in a slight uptrend. Sweet. Let's see what happens, right? As soon as the market opens, we decide to break above this 200 simple moving average and we make a big move towards the upside, right? Now, I'm like, oh my God, this might be the move. This looks really, really nice. Why? This very simple reason. We're in an uptrend and we made a decent move towards the upside and it broke above this 200 moving average first half an hour on a 2-minute chart or any time, like pretty much acts as a strong resistance or strong support. Okay, so I was like, oh my God, all right, sweet, I'll watch this. But I'm a sort of trader, I like to wait for a pullback, right? So after any move that happens, I want to wait for a little pullback and then I draw the Fibonacci's and I see what levels are holding, and then I will jump into a trade based on that, right? So I was like, okay, let me see. And then I saw another big move towards the upside. Like this is a green candle. Look at this. I'm like, oh my God, this really looks good because the market opened at 543.66. It's trading somewhere at 544.6-ish. So that's a dollar move already within first 4 minutes. I'm waiting for a pullback. Like, I want to see a pullback. If I can get a pullback, this is going to be nice. I'll be happy. The trade going to be nice. And let's see how it goes. Right. And then we started getting a pullback. I'm like, oh my God, thank God. So what I do is, this is a source. Nobody's going to teach you this. The Fibonacci's. Okay, I grabbed the Fibonacci's, I dropped the Fibonacci's where the trend started intraday. So the trend started right here, right? The lowest point to the highest point, I dropped it. These two lines that running across 0.236 and 0.382, I love these levels. Okay, I love them. I just love them. I love them. I love them. Anything after that, if the price can hold anything like these two, like right here or even here, as long as it doesn't touch 0.5, I'm chill, right? So I saw this. I'm like, sweet. Now, if it can get above this Fibonacci level, I'm like, I'm all right. I'll give it a shot. The stop loss is, this is the crazy part. The stop loss simply goes right below this particular candle. So I'm like, okay, I'm risking about 15 cents, right? Think about it, 12, we can say 15 cents. And I am looking for a move towards my next hourly level that is on my charts, which is 545.6. Now just think about it. I'm risking about 12 to 15 cents. We can just say 15 cents here. Risking 15 cents to make a $1.15 move. Bro, you know how much? Most of the people don't understand this. Like, that means if I'm risking $1, my reward is 7.5 times that. So that is the reward for every $1 risk is $7.50. Now people go, bro, why don't you tell me how much you risked? Bro, this is how much I risked. Every $1 that I risked, I stand it to make $7.50. That's the risk. This is literally it. It's that simple. All right. Now with options, it's never going to be exactly this, but it's going to be roughly this. Every $1 move going to bring in roughly about $7, which is nice. So sometimes it can be $10 depending on how the fast price moves. As soon as the next candle opened, it dipped below a little bit. That's okay. But then it picked up. As soon as it picked up, this broke above this Fibonacci level, roughly around here. I went like, all right, this looks nice. I jumped in. I jumped in my calls around this right here. And I'm like, let's see, right? And it made a big move up. And by this point, I was already up like decent, 545, because I'm risking so small. And I did this big position size because my risk is so small. Think about it, right? If you are only risking 15 cents per the stock price, I can do big position size. Why? Because my risk is very small. So, you know, the reward can be massive. If the risk is small, reward is massive. By the time I reached this 545, I'm just like, oh my God, this is such a beautiful move. I'm already up decent. So I took a little bit off. Yeah, I should not have, but I took a little bit off. That means my first profit target became this, which is still decent, right? Still decent. That's like I'm risked $1 to make about $4. I'm still happy. And then I am looking for the next move, which is 545.6, and I'm like, all right, let's see. Market went up significantly again. And I'm just like, oh my God, this is nice. Right, so I'm like, all right, if we can get to 545.6, this is going to be good. Right, and then the price came. Now the thing is, a lot of people literally go, now I didn't exit the whole thing here. I still had a little bit position size left, which is the next point I want to break down, which is called negative risk management. So negative risk management is, a lot of people worry about risk management. All right, risk management is important. But what do you do when you are in a trade? It's called negative risk management. Right. So negative risk management basically means when I took my first profit targets right around here, so the contracts were trading, let's say if the contracts were trading at where I entered, the contracts were like $1 each. By the time I took my first contracts off, they were $1.30, for example, right? That means I made about $30 a contract, right? These are the options move, $30 a contract. And for my remainder of the contracts, that means if I took half my position size off, for example, that means out of 100 contracts that I was in, I was not in 100, but out of 100 contracts that I was in, I took 50 off at $30 a contract. That means $1,500 gained, like I have put in my pocket, right? And the remainder 50 that I have, I'm holding for the next target, whatever it is. I'll take another 25 off at the next target that I have. That means out of 50, I'll take 25 off at the next target. Now, by the time it reaches this 25, let's say this is $80 now. So now I made $80 times 25, whatever the number is, right? We'll just leave it here empty. Let's say $1,000, right? Whatever. So $1,000, whatever, 1,500 plus 1,000, that's 2,500. But where was my risk on the remaining position? Doesn't matter where the contracts were at that stage. My stop loss is the break even of the option contract. Just imagine if the stock price reversed here, I would have gotten out the moment the contracts came to $1 each. This was my risk. So basically I have zero risk to take this, literally hold this trade towards the next level. I'm like, if my break even hit, I'll jump out. But if it goes to the next level, this is just free money. Right? So why wouldn't I take this trade? Well, why wouldn't I hold this trade? People do this mistake where they jump out and then they are like, all right, I don't know where to put the stop loss. Bro, put your stop loss at the break even. The remainder of the contracts, put your stop loss at the break even, just in case if it decided to go up, you can take a little bit more off. But just in case it decided to come down, you are not losing anything. So now at this stage, when I took 25 off, I'm still holding about 25 with a break even stop loss. I made $2,500 already from this, right? For example, this is just an example. Now, my risk on the remainder is zero. Why? I'm not losing any, like Nipsey Hussle says, all money in, no money out. This is in the pocket already. I don't want to lose this money. So the stop loss becomes the break even on the 25 contracts that I'm still holding, and whatever happens, happens, right? And now this is how this trade went. It started coming down, and I think my stop loss got triggered roughly around this candle. I was like, all right, I'm chill, I'm happy, I'm laughing. And that was a trade. Beautiful trade, beautiful executions. And just in case it would have gone up even further up to 547, these contracts would have been like, 200% trade, 300% trade, whatever. And that would have been just extra money for those 25 contracts. But this was a trade, and that's why I took the trade and I broke down the entire thing, all right? Now let's go over the second trade that I took, which was Apple. Now, Apple was again the trade that I took. Literally, I took this trade again on a 2-minute chart because the chart looked pretty freaking good. I'll break this down and you'll be like, oh my God, this is the cheat code, yo. I'm telling y'all, this is the cheat code. All right, now, I was not watching. I was in SPY trade. I was like chilling in this trade, chilling around this time. And I was not even watching the charts of Apple up until this price. I was not watching. I started watching. I'll show you where I started watching Apple. I started watching Apple when Apple made a big move towards the upside here. I'm like, oh my God, we broke above the pre-market high. We broke above yesterday's high. This is insane, right? I'm like, this is insane. So it started giving me a little pullback. Sweet. Started giving me a little pullback. Now I drew my Fibonacci's from the lowest point to the highest point available so far. I'm like, let's see what happens. Now let's see where it want to pull back to. Where does it give me an entry? Now, as I said, these are the Fibonacci levels. I love these Fibonacci levels, right? I'm like, okay, let's see. We are holding. There's a confluence of 8 exponential moving average. There's roughly about the pre-market high sitting right at the bottom right here. And there was another level that I was watching. I think, there was an 8 exponential moving average. And the previous rejection kind of was happening early in the day as well. Right around there. So you can just say, there was a area for supply turning into demand, all right? And now, I'm still watching. I'm like, okay, let's see what happens. And now, when this candle closed, clearly it's telling me that 8 exponential moving average is holding. This area is holding. Fibonacci level is holding. I'm like, all right, everything is holding. The moment it reclaims this 0.236 level, I'll jump in with my stop loss just below this particular Fibonacci level. So how much money I'm risking now in this particular trade? My risk is, again, I'm conservative, but I'm aggressive at the same time, all right? So my stop loss is just below this particular level. First profit target that I have is just this hourly level, which is the yellow line right here on the top. So I'm risking about 46 cents to make 75 cents. Now, that means every $1 that I risk, I stand to make $1.60 in returns. Pretty good, right? It's like a machine that you put $1 in, on the other side, it might spit out $1.60, which is nice. Now, I did this trade. I'm like, sweet, let's see. And price started pushing up. Now, the moment it hits my profit target, roughly around here, I jumped out a little bit. I'm like, all right, sweet. What did I do? Negative risk management. Again, same shit again. Like, I'm literally giving the full sauce right now. All right. So I went from, okay, let's say if I'm in 50 contracts, I'm like, let me jump out of 25 right here. The 25 that I'm still holding, stop loss is break even now. Let's see if it can get to the next level. I'll take 12 off out of this 25. If it goes to the even next level, I'll take 12 off or 13 off again, or even 6 off, or whatever you want to do. But the stop loss still stays break even. You keep taking half and half and half and half every yellow line. And these yellow lines are the secret. You know, these yellow, if you're like, oh bro, but teach me how to make these yellow lines. Oh, this is I teach this to my students in the university, and if you want to check that out, there's a first link in the description box below. You can check that out. Yeah. Again, I'm not saying that you have to, but if you want to. Anyway, so now let's see how this trade goes. Trade's pushed, and it pulled back, whatever, a little bit, no stress. Now 10 o'clock hit. Now what do I do when 10 o'clock hit? I jump on a 5-minute chart. Right, and on a 5-minute chart, by the time this 10 o'clock candle closed, it closed very aggressive. I'm still in the trade. My stop loss on the 25 contract still break even, and it pushed. It hit this particular level. I took 12 off. I'm like, okay, sweet. I still have like 13 contracts remaining. All right, with a stop loss break even, and it's decent profit right now. I'm like, sweet, let's see. And it started pulling back. It didn't hit the break even, so I'm still in. I'm chilling. Price started pushing up towards the upside again. I'm still chilling. Hey, I'm still have my 13 contracts. The next profit target that I have is the next level, 119.8-ish. I'm like, let's see. Now, break even not hit. Price started pushing up again, and then it pushed up again. And this is where my profit target got triggered. And out of these 13 contracts that I was still holding, right? Out of the 13 contracts that I'm still holding, you know what I did? I took out, I think about 8-ish, or I had like a few contracts left, like probably 5-ish or something left, but I took out most of it, right? And then started pulling back. Now, it never hit my break even. Like up until I exited, never my break even was hit. But this entry, now imagine if you just got out the whole position here and tell yourself, oh, nobody fucking goes broke taking profits. Bro, nobody gets rich taking small profits. Nobody gets rich taking small profits. Now imagine this. If you go to a park, all right, you go to the park and you see there's $100,000 sitting on a park bench. And you're like, oh my God, there's $100,000 sitting there. Jesus, right? And you're like, oh my God, this is nice. Thank you, God. I really needed this money. Whatever. But you need about $100. You don't need the whole thing. You look around, you're like, nobody's there. Let me just take $100 out of this. And you run away. Bro, you're crazy. Why didn't you grab the whole thing? Or don't grab any, or grab the whole thing. Right? What are you doing? Right? So if you want to grab the money, may as well take the whole thing. Right? So this is what people do. Oh, let me grab the money. And they grab a little bit. Bro, use negative risk management. Let your runners run with a stop loss break even. Negative risk management. You're not losing anything by letting those runners run. It's all to gain. And I kept pushing it up. I got to a stage where to be honest, I didn't want to hold it because my position size was so small. I think I had like 2 contracts at the end. I was like, all right, 2 contracts, even if it doubled in value, even if these contracts where they are right now, they double in 2 hours. Will that make the gains make me excited? Extra $200, extra $300. Will that make me excited? I'm like, no. So I exited. This is when you exit. When there's like, oh, I only have 1 contract left now. Even if it goes up another 10% on the option contracts, even if it goes up 100%, whatever, man. I'm calling it a day. And by the way, these whole trades that I was taking, I took them from my phone, right? I took them from my phone. I was not even trading. Otherwise, I was not in my office. I had two phones. One is Android. I'm sorry, Apple. I have Apple as well, but Android. I had my charts open on the Android, and I was executing my trades like this. I was like literally like this. Oh, let me exit, let me enter, let me exit, let me enter. So, which is why I didn't want to do too many trades, and I wanted to hold the trades for bigger because I was just on my phone, right? I didn't want to take another trade. I didn't want to be like, oh, let me take 20% gains. Now, let these runners run. So now, think about this now, all right? Now the question goes, how much money did I risk? My original risk was, how much? 46 cents. By the time I finished taking the last, even right here, my reward for 46 cents was $2.50. That means every $1 that I had in the stock, in the option contracts, turned into $5.4. This is how you make money, yo. You let your runners run. This is how you make money. There's no other freaking way. That's how you I don't know. If you have any other way, you let me know. And if you say, oh, nobody goes broke taking profits, you're crazy. You're an idiot. All right? Because guess what? Nobody gets rich taking small profits. I'm just keeping it real. You want to take it home or you want to just leave it here? That's on you. Let your runners run. Negative risk management is a thing. And nobody will teach you this shit over YouTube, or even people don't even know this stuff, man. Like, I'm not shitting on any other trading coach or anything. It just, bro, they don't even know this shit. They exist. So whatever you want to do with this information is on you. All right? I'm rich by itself already. So you want to get rich using this, you get rich. You don't want to get rich using this and you want to fucking hate in the comments or whatever, that's on you again. Now, these are the 2 trades. That's all I have for you. And if you like this, I'm not a YouTuber, I'm a day trader. I don't know how the whole thing works, algorithm works. Just drop a like, because it can't fucking hurt you, but maybe it's gonna help the channel. So why wouldn't you do it? Leave a comment, what did you learn from this? And subscribe to the channel if you haven't yet already. All right, I'll see you soon. See you in another video. And peace. I'm out. Goodbye. Look after yourself. All right. All right.